Very tough day here for pound sterling. Currency slid below $1.50 for the first time in almost a year. The United Kingdom is set to hold a general election this spring, and new polls show that Britain may have a hung parliament, that is no majority for the first time since 1974, and would be unable to take strong measures to lessen the deficit. Joining us now is Mike Moran, senior currency strategist at Standard Chartered Bank. Mike, great to see you. So explain why all of this is weighing on the value of the pound.
Well, we think sterling has been somewhat overvalued for the course of the last 2 or 3 months, given all the debt issues surrounding the euro and some of the other G10. So we think that sterling had it coming, and I think it was this political poll that we had overnight showing a hung parliament, which really was the litmus paper that was lit. And with the hung parliament, there is just so many unknowns, and now we really want as much clarity as possible. What normally happens is, policy gridlock can often be good for a currency because it ensures a certain degree of policy continuity and less uncertainty. But when you're in the fiscal problems that the UK is in, what you actually want is a big majority, which would suggest that policy reform has a higher chance of actually succeeding. It doesn't look like we're going to get that in the UK, and I think that's going to really hurt the outlook for sterling, even when you compare it with say Greece.
So again, the pound is below $150 today for the first time in about 11 months or so. So that said, this policy gridlock, what does it mean for how has it influenced your outlook for the sterling?
Well, we're still waiting till May, till the actual election itself. So there's going to be at least 2 months there where there'll be some speculation. We'll be following a lot of the polls, but comparing with Greece, I mean, at least the UK still has monetary sovereignty, so it can set its own interest rates. It can print its own money if it really needed to. So I think that does put it one up against some of the other indebted nations. But with the uncertainty, I don't think it's going to clear up real soon. We'll be looking at reselling sterling if we can see it back up to, say, the 152, 153 area. I would say that the IMM data certainly suggests the positioning in sterling is overwhelmingly short. It's not a good level to really get in right now. We need some retracement before we see this trade continue to go lower.
You presented the comparisons to Greece, though. Give us a better sense of how weak the economy is right now in Britain.
Well, it's mixed. I wouldn't say it's extremely weak. I mean, we've had patchy data from various parts, but especially with the UK, which is heavily dependent on the financial industry, first of all, and the domestic housing market. We really need to see those two sectors really outperform to really to trickle down to the rest of the economy. And we're still at the early stages of that for the time being. So I don't think that's necessarily a very bullish picture for the UK in general. It's really about the policies and reforms that can actually be put in place quickly, and with a hung parliament, I don't think that's going to really happen.
So questions raised, right, about the lack of easing from the Bank of England in the months ahead. Any chance this drastic move in pound sterling will influence the BOE to change its stance?
No, we don't think so. They still kept a very easy stance at the moment. They have not extended the QE much further, but they leave the option open if needs be. So they maintain that kind of flexibility. A weak currency, I think, helps the UK. I think it really helps them get through some of the issues as dealing with debt-wise or current account-wise, all those things. So I think it is tolerable, but it's not. They don't want the volatility that we're seeing. Seeing 2-3 big figure moves a day is not what they really want to see, but certainly a weaker currency over the course of months would be certainly preferable.
Mike Moran, currency strategist with Standard Chartered Bank, thanks so much.